You did it, you saved up your first $100 to invest. Seriously, congratulations, that's a huge first step. But now you're facing a choice that feels massive. Do you go the traditional route with stocks, the path that's built fortunes for over a century? Or do you jump into the wild world of crypto, where the next big thing always seems to be right around the corner? It's a classic dilemma. One path feels a little too slow, and the other feels way too scary. Making the wrong move feels risky. But the nagging feeling that you're being left behind if you do nothing is even worse. Stick with me for a few minutes. We're going to cut through the hype, ditch the jargon, and give you a clear, simple answer on the smartest place to put that first $100 to get your investment journey started on the right foot. The before state and the myth. Let's picture a new investor. We'll call her Alex. Alex worked hard, saved her first $100, and she's ready to make it grow. The problem? She's paralyzed. Every time she glances at her phone, she's bombarded with headlines about Bitcoin, Ethereum, and a dozen other coins she can't even pronounce. Influencers are flashing massive gains, and the FOMO, the fear of missing out, is real. Then she talks to her parents. They tell her crypto is just a fancy word for gambling and that the stock market is the only real way to build wealth. Now Alex is caught between two completely different worlds, and the fear of choosing the wrong one means she does nothing at all. Her $100 just sits in a bank account, slowly getting eaten away by inflation. This brings us to the biggest myth in investing, the idea that you need to be a Wall Street genius or a crypto prodigy to succeed. The myth says your first investment has to be a home run. The truth: the most important part of investing isn't being perfect, it's just starting. The biggest risk isn't losing $100 on a bad pick, it's letting a decade fly by with nothing to show for it. Your goal with this first $100 isn't to get rich overnight. It's to build a habit. It's about learning the ropes, getting comfortable on the platform, and setting up a system that will serve you for the rest of your life. The habits you build with this money are worth infinitely more than the $100 itself. Okay, before we even debate stocks versus crypto, let's get our tools ready. The first real step is opening the right account. Forget any old school image you have of investing. Today, you can open a brokerage account from your phone in less than 10 minutes. You'll want a beginner-friendly platform. In 2026, top names like Fidelity, Charles Schwab, and Robinhood are popular for a reason. They're built for new investors, often with zero account minimums and commission-free trading for stocks and ETFs. Once your account is open and linked to your bank, you're ready to deposit that $100. And this leads us to a game-changing tool for beginners: fractional shares. For a long time, if you wanted to buy a share of a huge company like Apple, you might have needed hundreds of dollars for a single share. While fractional shares have been around for a while in things like dividend reinvestment plans, they've become widely available in recent years, making investing accessible to everyone. Now, you can invest by the dollar. You can buy $20 of Apple, $10 of Tesla, or your entire $100, even if a single share costs more than that. Now that your account is set up, and you get how fractional shares work, you're officially ready to go. The foundation is built. So, let's finally tackle the big question: where does that $100 actually go? Here we are, the core of the decision. On one side, you have the stock market, the backbone of wealth creation for more than a century. On the other, cryptocurrency, a new digital frontier with breathtaking potential and terrifying risks. Let's break them down. So, what even is a stock? Think of it as owning a tiny piece of a real company. You become a part owner. If the business does well and grows, the value of your slice can go up. Some companies even pay you a portion of their profits, which are called dividends. But for Alex, our beginner with $100, buying a single stock is probably a mistake. Putting all your money on one company is like betting your entire grocery budget on one horse. This is where the most important investment for beginners comes in: the exchange traded fund, or ETF. An ETF is basically a basket holding hundreds or even thousands of different stocks. Instead of betting on one company, you're betting on the whole market. The most common recommendation for beginners is an S&P 500 ETF. This single investment spreads your money across 500 of the largest, most successful companies in the US. You get exposure to tech giants, healthcare leaders, and big consumer brands all in one click. The pros here are huge. First, it's diversified. If one company in the fund has a terrible year, it's balanced out by the 499 others. Second, it has a long, proven track record. Historically, the S&P 500 has delivered an average annual return of around 10%. Now it's critical to understand that past performance is no guarantee of future results, and returns can vary wildly year to year. But that average is based on decades of real-world history. Third, the stock market is heavily regulated, which offers investor protections that you just don't find in other places. For a beginner, an S&P 500 ETF is the smart, steady, and proven path to building wealth. It's the get-rich-slowly method that actually works. Now, let's talk about the wild side, cryptocurrency. Unlike a stock, when you buy something like Bitcoin or Ethereum, you aren't buying a piece of a company. You're buying a digital asset secured by blockchain technology. Its value is driven by things like scarcity, utility, and pure investor demand. The appeal of crypto is obvious, the chance for explosive returns. We've all seen the stories of people turning pocket change into a small fortune. Over the past several years, major cryptocurrencies have posted returns that make the stock market look sleepy. It feels like getting in on the ground floor of a revolution. However, that potential for high returns comes with extremely high risk. The biggest one is volatility. It's not unusual for a crypto coin to swing 20% or more in a single day. An investment that doubles in a week could just as easily get cut in half. The market is also far less regulated, leaving it open to scams, hacks, and manipulation. There's no safety net, and it's entirely possible for an investment in a smaller coin to go to zero. For a beginner, putting your entire first $100 into crypto is like sitting down at a high-stakes poker table when you're still learning what a full house is. The potential reward is thrilling, but the risk of losing your entire stake is very, very real. So, for the vast majority of beginners, the smartest and safest way to start is with a broad market stock ETF. It builds a strong foundation on a century of proven growth, teaches the right principles of diversification, and avoids the kind of gut-wrenching volatility that can scare new investors out of the market for good. The goal of your first investment is to stay in the game, and an S&P 500 ETF is the best way to do that. But this doesn't mean crypto has no place at all. For those who are curious, a sensible approach is the and not or strategy. This means you don't have to choose between stocks or crypto. You can invest in stocks and crypto. Here's a practical way to use your first $100. Allocate the lion's share, say $90, to a low-cost S&P 500 ETF. This is your core, your foundation. Then, if, and only if, you are genuinely curious and completely okay with losing the money, you can take the remaining $10 and put it into one of the most established cryptocurrencies like Bitcoin or Ethereum. Think of that $10 not as an investment, but as the price of admission to learn about a new technology. If it goes up, great. If it goes to zero, it's an inexpensive lesson. Here is your simple, 4-step action plan. Build a tiny safety net. Before investing, try to have a small emergency fund. This is cash for unexpected life stuff, so you don't have to sell your investments at the worst possible time. Open a brokerage account. Pick a beginner-friendly platform with no minimums and commission-free trades for stocks and ETFs. Invest in a broad ETF. Put the majority of your first $100 into a low-cost S&P 500 index fund ETF. Tickers like VOO, IVV, or SPY are common examples. This gives you instant diversification. Set it and forget it. This is the real secret sauce. Set up an automatic transfer and investment of a small amount every week or month. Even $25 a month builds an incredible habit and puts the power of dollar cost averaging to work for you. Your first $100 won't make you a millionaire overnight, but the habit of investing it, and the system you build around that habit, absolutely can over time. You've just taken the hardest step. You've started. You've gone from just a saver to an investor, an owner. You've planted a tree that with patience and consistency can grow for decades. Now I want to hear from you. What are your thoughts on stocks versus crypto for a beginner? Where did you put your very first investment dollars? Drop a comment below. Your story might be exactly what someone else needs to hear to get started. And hey, if you found this helpful and want more simple guides to build your wealth, do me a favor and hit that like button and subscribe. Thanks for watching, and I'll see you in the next one.